Welcome to the bull versus the bear. Today, we're breaking down one of the most explosive stocks on the entire planet, Nvidia.
All right, let's just start with the scale of this thing. As of late October 2025, Nvidia's market cap is sitting at nearly $5 trillion. To put that into perspective for you, that is bigger than the entire economy of most countries on Earth. It's just a staggering number.
And a number that big, well, it naturally raises the one central question we're going to tackle today. Is this just the beginning for an unstoppable AI titan? Or has the hype just gone way too far, creating a bubble that's priced for absolute perfection?
Okay, so here's how we're going to break this down. We'll set the stage with that $5 trillion question. Then we'll dive into the bull case and the bear case. We'll put them head to head, look at the valuation, and then at the end, it's all going to come down to your verdict.
All right, let's kick things off with the bull case. Why on earth do so many people think that a $5 trillion company still has a ton of room to grow?
Well, the core of the whole bull argument really comes down to one thing: the absolutely massive size of the AI market. We're not talking about selling a few more computer chips here. No. This is about building the entire foundation for a brand new technological age. We're talking trillions with a T.
You see, the bulls, they don't just see a chip maker. They see an entire AI ecosystem. It's not just about the GPUs they dominate. They're pushing into networking, software, services, and they've got their eyes on huge long-term plays like robotics and automotive. And the demand? It's just insane. They can already see $500 billion in revenue coming down the pike for 2025 and 2026. And get this, they're doing it with incredible 75% gross margins.
So what's the secret sauce here? Well, for the bulls, it's not just about the hardware. It all comes down to what people in finance call a wide economic moat. You know, like a castle moat. It's this powerful, deep advantage that makes it almost impossible for competitors to attack.
And Nvidia's moat has a name: CUDA. It's their own special software platform. The best way to think about it is like this. It's a unique language, and an entire generation of AI developers has spent years learning to speak it fluently. It's the toolbox they use for everything, and here's the kicker: it only works with Nvidia's hardware.
And that right there creates what you call a lock-in. The switching costs are just astronomical. Once a company has built its complex AI models using CUDA, they can't just unplug an Nvidia chip and plug in a competitor's. Nope. They'd have to rebuild their entire model from scratch. We're talking a hugely expensive, time-sucking nightmare. They are effectively locked in. And you can see that dominance play out right here in the numbers. I mean, just look at this. These are the revenue forecasts. You're seeing a climb from about $60 billion to, over $500 billion in just a few short years. That is the kind of explosive growth the whole bull case is built on.
Okay, but every great story has another side, right? So let's flip the coin and look at the bear case. And look, the argument here isn't that Nvidia is a bad company. Far from it. The argument is that the stock is priced for a perfect future that, well, might just never show up. So what's keeping the bears up at night? Well, it's a few big things. A valuation that is just sky high, leaving zero room for error. Competition that's popping up from some surprising places. And of course, some pretty serious geopolitical risks. Let's dig into that.
One of the biggest red flags for the bears is customer concentration. See, when your biggest customers are literally the biggest tech companies in the world, Google, Amazon, Microsoft, the hyperscalers, you've got a potential problem on your hands. They're spending billions with you, and you can bet they have a massive incentive to figure out how to do it cheaper, or just do it themselves.
And that's not a what if, folks. It's happening right now. The competition isn't just the usual suspects like AMD, it's Nvidia's own customers. Google's building their own TPUs, Amazon's got Trainium and Inferentia. They are all pouring money into making their own custom chips so they can cut Nvidia out and control their own destiny.
Okay, so let's put these two stories head to head. This is really the core conflict, the main tension that every single investor has to wrestle with here.
So on one side, you've got the bulls saying the CUDA moat is just unbeatable. The lock-in is just too strong. But the bears, they say, hold on. The richest companies on the planet are actively building a bridge right over that moat. They're spending billions to engineer their way around it.
Then you have the spending debate. The bulls see this multi-trillion-dollar AI revolution that's going to reshape the entire world, justifying every penny spent. But the bears are asking a much simpler, more pragmatic question. Is the ROI sustainable? I mean, is all this spending actually going to make enough money? If not, you better believe that spending will slow down and demand could dry up fast.
And finally, there's the global picture. Bulls see a global AI powerhouse expanding everywhere, but bears see a geopolitical target. Look, when you're the leader in the single most important technology on the planet, you become a pawn in a much bigger game. And with things like US sales restrictions to China, a huge chunk of your revenue could just disappear overnight.
All right, let's talk about the elephant in the room for this entire debate, the price tag. Because, as they say, price is what you pay, but value is what you get.
And this is where it gets really interesting. According to analysis from Morningstar, even with the stock trading around $191, they think its actual fair value is closer to $225. So, believe it or not, that suggests that even after this mind-blowing run, the stock might still be undervalued.
But, and this is a huge but, here's the catch that the bears are screaming about. That valuation comes with a price-to-earnings ratio of over 55. Just for context, the historical average for the stock market is somewhere around, 15 to 20. So, yeah, it's steep.
So what does a PE that high actually mean? It means the market isn't just paying for what Nvidia is earning today. It's paying for years and years of massive, flawless, absolutely perfect growth. All of that future success is already baked into the price. And that's the definition of being priced for perfection. Any little slip-up, any stumble, and the stock could fall hard.
So, there you have it. That's the debate. The powerful bull story of an unstoppable AI champion versus the cautious bear warning of a stock that's just too expensive. So in the end, it really all comes down to one question. Which story do you believe? Is Nvidia this unstoppable force with an unbreachable moat set to dominate for the next decade? Or is it a great company, no doubt, but one whose stock is flying a little too close to the sun with gravity from competition and that massive valuation just waiting to pull it back down?
Now, we want to hear from you. Get down in the comments and let us know. Are you a bull or are you a bear on Nvidia? And most importantly, tell us why. We read all of them. And hey, while you're there, make sure you subscribe to The Bull versus the Bear for our next breakdown.